Hey guys, in this lesson, we're going to be taking a look at the inventory system. So we're going to give you kind of a high level understanding of how inventory works from a financial accounting standpoint. And then we'll also take a look at some of the calculations that you're going to probably need to know in this section as we continue talking about inventory for merchandising companies. So let's go ahead and get started on understanding this inventory system. The first thing that we should understand is kind of the flow of the cost of inventory through the financial accounting system. So we're trying to understand the flow. So when we buy, for instance, this packet of staples, what's the flow of that cost? That $1 it costs us to buy this, and then we're going to sell it for $2. What is the cost? The cost is $1, and then how does that $1 flow through the accounting system? So if we take a look here, we've got the inventory account, and then we have the cost of goods sold. So that $1 for those staples would kind of flow like this. So when we buy it from our vendor, we are going to debit inventory. So it's going to come into inventory. We already said that inventory is an asset account. So we would have a debit balance here of $1 for inventory. So $1, and then our $1 is there. So now we have this on our shelf and we can then sell it. When we do sell it, we're going to take the cost of it, in this case $1, and we're going to transfer it out of inventory into cost of goods sold. The way that we do that is through a journal entry, and we can see here in our picture that all we're going to do is we're going to transfer it out of inventory into cost of goods sold. And the way that we do it is we are going to credit inventory for that $1, and then we will debit cost of goods sold for $1. So kind of understanding the flow, we're going to bring it into the inventory account. And then when we sell it, we're going to move it to cost of goods sold. Cost of goods sold is an expense account. So that's kind of the pictorial relationship view of inventory. Now, we also have an inventory equation that you should know. And here's a pictorial view of it. And then I'll give you the non-pictorial view. So this is the best way that I can show it to you. So from an inventory equation, we always start with beginning inventory. So at the end of the last year, there usually is some type of inventory left that we're going to start in the new year. So the way that I like to think about this is if you go out and have a blast on New Year's Eve, you started the night with $100 in your account, and then you spent, let's say, $40 on New Year's Eve activities. So at the end of the night, how much money do you have left? You have $60. So that $60 at the end of the night, hopefully will be the $60 that will be in your bank account when you wake up the next morning on January 1. So when you wake up, you'll have $60. So last year's ending balance becomes this year's beginning balance. So we still have $60 that we can use throughout the next year. So we always have a beginning inventory balance. So what did we leave off last year becomes our beginning balance this year. From that number, we add to it any purchases we make during the year. So if we started with, let's say, 20, or we started with 20 of these, and then we decided over the course of 1 year to buy another 1,000 of these, we would add that to our beginning inventory. So beginning inventory plus our purchases gives us something called goods available for sale. So the way that I like to think of goods available for sale is how much goods were available for sale at any given time during the year. Well, if we started the year with 20 and we bought 1,000 more during the year, then at any given time in the year, we had 1,020 units available for sale. Another way we can also do this, instead of quantity, we can also use dollar amounts, but we're not going to use dollar amounts just yet. Just think of quantity for our example. So 20 at the beginning of the period, and then we bought 1,000 after that, gives us a goods available for sale of 1,020. Now, what happens with those goods once we have possession of them? Well, they can either be here still in ending inventory, or they can be sold, cost of goods sold. So once we have goods available for sale, we either have sold it, goes to cost of goods sold, or it doesn't sell, goes to ending inventory. So if we have 1,020 goods available for sale, and we say sell 500 of them, then 500 would go to cost of goods sold, and 520, which would be what's left over of the 1020, would go to ending inventory. And again, we can do it by quantity, or we can do it by the cost of that inventory to us. So that is a picture way of thinking about this next equation that I'm going to kind of show you right now. So we can also do it in this format. So beginning inventory plus purchases equals goods available for sale. And then here's where we're going to get a little bit of difference between the next equation, but we can subtract ending inventory to give us goods available for sale. So how much inventory did we have during the year? Goods available for sale. And how many do we have left on our shelves? That would be ending inventory. So if we have X amount on our shelves, then the rest were sold, cost of goods sold. Now we can flip this equation just a little bit and get beginning inventory plus purchases equals goods available for sale. But instead of subtracting ending inventory, we can subtract cost of goods sold. So if we know the cost of goods sold number, we can get to ending inventory. Now, either equation will work. It really depends on what you're trying to do. Are you trying to find cost of goods sold, or are you trying to find ending inventory? So what I would do here is you can do memorize one and then just fill in the X that you have to find, or memorize both and then use one if you're trying to find cost of goods sold, which would be the left one, or use the other one if you're trying to find ending inventory. Now, let's go through an example here so you kind of see how this all works here. Assume that company A purchases $22,000 of inventory during the year. At the end of the last year, the company had $12,000 of inventory in its possession. At the end of the year, the accountants counted up $6,250 left. What was company A's cost of goods sold? So we're looking for cost of goods sold. So I'm going to use the cost of goods sold equation. And notice I've got beginning inventory plus purchases gives us goods available for sale. From goods available for sale, I can subtract ending inventory, and that will give me my cost of goods sold. So now we're just going to go ahead and plug in the numbers here. So the first number they give us here is, or the first number that we're trying to find is beginning inventory. And if you notice here, it says at the end of last year, company had $12,000 of inventory. So if it was the end of last year, it becomes the beginning of this year. So the beginning inventory was $12,000. From there, we're going to add to it purchases. So if we add purchases, we see that company A purchased $22,500 worth of inventory during the period. So we're going to add $22,500. Now, if we do that math, we get goods available for sale during the year of $34,500. Now, from that amount, it was either sold or not sold. What number do we have? We have the number that they have not sold. What is left? So we're going to subtract $9,250, and that's going to give us a cost of goods sold. So what was our cost of goods sold? When we subtract $9,250, we get $25,250. So all we're really doing here is we're just trying to analyze what has happened during the year with the company's inventory, and then whatever we're trying to find cost of goods sold. This is the equation that we're going to use. If we're trying to find ending inventory, we would flip them. Now, the one question that I usually ask students here at this point is, which one is easier to figure out? Is it easier to figure out cost of goods sold or ending inventory number when you are thinking about your operations? Well, one thing to think about is, what can you count on? Well, at the end of the period, you can always count your inventory because as a business, you have physical access to your inventory. It's a little bit harder sometimes to count your cost of goods sold because you would have to count what you sold. Well, if you didn't keep track of that during the year, that would mean you have to go to every customer's house and figure out what they bought. So what's easier sometimes is this equation, because you can actually see what you have in inventory because you could actually go up to it and start counting it. And if you can count it, then you can do this equation pretty easy and just back into the cost of goods sold without actually having to figure out what you actually sold during the year. So a lot of small businesses love this because they can look at their inventory and know how much they've sold. They have paperwork on how much they purchased during the year. And then since they did their books last year, they know what their beginning balance is. So what they don't have is their cost of goods sold, and they can use this equation to back into that cost of goods sold number. So that is a look at inventory system. We did two things here. We showed you kind of how cost goes into the financial accounting books, and then how it's transferred to cost of goods sold. And then we also helped you understand the inventory system equation to get to ending inventory or cost of goods sold. Now, one thing to note about that equation is I don't have to go from top to bottom. I could go from bottom to top if I have that information. So if you're doing, let's say, an assignment and you're going, well, I'm missing beginning inventory, that's probably because you're given all the other ones and you have to solve going backwards instead of from top to bottom. So I hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.